Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Anucauskas. Today's the 14th of March 2019, so welcome everyone. Welcome to this Thursday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, let's quickly jump into the charts. Now looking at this one first, Ripple, basically a bit of a sneaky move here yesterday from Ripple, and you can see that initially it had a nice pop here to the upside. Now I was talking about this one in my trader's tea time as well, and we were still trading above this key area of resistance near the 0.3230 level, but then I was telling you guys to keep a close eye on today's close. Basically, this is where, of course, it ended the day. It ended back below this little short-term downside resistance line taken from the high of the 1st of March, and in a way it's kind of back into this triangle formation if you just take it from here, from this low here of the 24th of February. So now we're back into the kind of waiting game again, so we're still the same levels apply again, so we're still looking for a nice pop, another pop above the 0.3230 level in order to kind of consider higher areas, but again, for now, you see that's the case. It's kind of pushing us back into this neutral position where we're just going to continue monitoring it and keep an eye on some of these key support and resistance levels. Now, in terms of the downside here, guys, of course, we still have this upside rising channel formation, which the crypto would have to break first to the downside, of course, in order to consider further declines. But for now, of course, that was what we're going to look at here. If this decides to slide lower here towards the 0.3145 level approximately there, then of course a break below that could force the crypto to retest the lower bound of the rising channel formation. Now, if that gets broken, if that fails to withhold, then yep, also a drop below this little area of support here, marked by the low of Tuesday, the low of Tuesday, which was around here, around the 0.3115 level. Now this is where it could become a little bit more interesting for the bears. We could see it in a further slide lower towards the towards the 0.3050 level, which also acted as a very good area of support here in the past. But if that fails, then yep, further deeper declines could be possible. We could see maybe a drop even below the psychological 0.30 level and then further down. But for now, that's where it is. This is where the crypto is right now. So again, I'll repeat myself. In order for us, let's say, to consider higher areas, we're looking at the same level, the 0.3230 level. A nice good pop above this could lead towards this next area of resistance, which also got tested yesterday, and that was around the 0.3320 level. And in terms of the downside, you could in a way start looking at initially, of course, looking at the 0.3145 level. A drop below that could test the lower bound of the rising channel, but if that fails to withhold, then yep, further declines could be possible, and this is where we'll initially aim for the 0.3050 and maybe then lower. But for now, that seems to be the case, and we're just going to remain somewhat more neutral and continue observing the price action. Gold. Now gold had a nice run yesterday. I was talking about this one in both of my videos yesterday in Espresso and the Trader's Tea Time. Basically, I was telling you guys initially in the morning to keep an eye on the 1308 level, approximately there. But you can see that it kind of had a nice overshoot. If we look at the daily chart quickly, we can see that the close came just slightly above the 1308, so just below the 1309, and you can see that this is what's happening today. It's sliding back down. You can see that of course we're now going to be looking at this 1302 level, which is already kind of slightly getting broken, but to be honest, for us to get more comfortable with the downside, we would like to see not only a break below this the short-term tentative upside support line, but also a drop below the psychological 1300 level, then of course we will look at areas like the 1290 or even lower. But for now we're going to play it short and simple. For now we're just going to observe this price action, see what it wants to do with this upside support line, if it actually even wants to travel towards that. Currently it's sitting near the 1302 level. If that actually acts as a very good area of support, now we could see this such a scenario like I've got an arrow drawn here, basically, where we could see a curve up here and then a push higher. So basically we have already moved lower, so let's see if it actually manages to curve up and push higher again. So the level that we're going to be keeping an eye on the upside is the 1315-16 area, approximately there, guys. So as it acted as a very nice area of resistance back here in around mid-February, maybe slightly even in the beginning of February. So that's why we're going to keep an eye on that one again. But for that one, we need to see a nice rebound from this area right here around this upside support line or this 1302 level. US oil, very quickly, not going to spend too much time on it, now managed to break through the upper bound of the range that I was talking about in my previous videos. So basically yesterday it managed to pop above the 57.85 level. Of course we might see a bit of a correction here to the downside, maybe actually even retest of this upper bound, but this time from above. Now this is the scenario that we're keeping a close eye on. So basically if we do see a correction here lower, and if it fails to drive below this upper bound, upper side of the range, then we could see the bulls stepping in here again and potentially lifting this this commodity towards the 59.25 level, which was also a very good potential area of resistance, because previously it acted as a good area of resistance here back on the 13th of November, and also acted as support on the 9th of November. That's why we're going to keep an eye on this level first. And if we see a move towards that level, then yep, we'll just take it from there and try to see what it wants to do further. Does it want to break above that, or actually does it want to retrace back down again? But for now, that's the situation here with the WTI. If this suddenly drops below the upper side of the range here, now of course, yep, we could see maybe a further slide lower here. But as you can see by the arrow, this is the area that we're going to be keeping a close eye on. Basically, a nice good drop below the 56.70 level could lead towards further declines. We could then maybe retarget the lower side of the range again. So for now guys, I mean, certainly the downside could be slightly off the table, but let's see how this plays out today. But again, this is what we're having in mind right now. We're keeping in this scenario in our heads. Don't get me wrong, we could see maybe even push towards today's R1, which is around the 58.85 level, and then retrace back down and then curve up. So for now be very cautious with this one. Probably a suggestion here is probably to stay put and just continue observing this, or if you're willing to risk, then have a very good stop loss here. GBPUSD. Now this is a bit of a roller coaster, and of course the activity that we're seeing here is just amazing in GBP. Basically, I was telling you about this one on Monday, guys, and I was telling you that we could see some increased volatility, and you can see these crazy moves here. Now let me just zoom in here a little bit, guys. So this line, this upside line, has to be slightly adjusted. Now we're gonna mark the January low here, and just connect these lines here nicely like this basically. So we saw that on Monday it didn't travel lower, so it managed to rebound from this upside support line and pushed higher, about 300 points higher. Then of course on Tuesday we had a slide, more than 60% loss of the Monday's gains. And then yesterday another rally here, a strong rally, also around the 300 points, maybe slightly more than that. So basically what's happening here today and during the Asian morning, we already saw this one retracing back down. You can see that it retraced back towards the pivot, which is around the 1.3250 level. Now this is of course what we're going to keep an eye on. If we see a nice push back up here, back above the 1.3285 level, you can see that this marks the high of Monday and also the high of the 1st of March. So a nice good push back above the 132.85 level could of course increase the chances of seeing this one traveling again higher towards the 133.50 level, which marks the high of the 27th of February. But if that fails, then yep, we could see further acceleration to the upside here. And you can see this is where our R1 is today, and that's around the 134.38 zone. So quite a decent move here could be. But again, we need to see if first a few levels getting cleared before we could assume the R1, today's R1, which is around the 134.40 level. So keep your eyes on that one, and keep your eyes on some of these higher areas here on the upside. In terms of the downside, well, I mean, if this decides to drop below the pivot, certainly this could increase the chances of maybe seeing a bit of a slide. To be honest, my personal kind of feeling here is, and to be honest, this is just a feeling, we might see something again, maybe like a slide lower here today, given the fact that the pound is currently on the weaker side. If we look at performances right now, so the pound is already on the weaker side. The dollar is, it seems to be the strongest one for now. Of course, everything can change, but if that's going to remain, then we actually could see a slide lower. And to be honest, this could be in line with the whole game plan of this week, basically. One day higher, next day lower, one day higher, next day lower. So I mean, basically, this, you could in a way keep this idea in mind, guys. I mean, I'm not saying that this could be exactly what will happen. Is first we'll of course monitor some key areas of support and resistance before we kind of look into any other directional move. But for now, basically, in terms of this, from the very short-term perspective, if this drops below the 132.50 level, below this pivot, then yep, we could see maybe a slide lower towards the 131.85, or even actually lower. In a way, you could also draw a tentative upside support line, but this is, again, this is just probably more of a manipulating chart here in your favor. But for now, probably ignore this line, just maybe have it like in your head, and that's it. For now, what we're going to do here is, of course, if we see a drop below the pivot, then yep, we will aim for a little bit lower levels here, like the 131.85, or even actually going further down towards the 131 zone. So also keep that in mind. But then again, that's only in the scenario if we see a drop below the pivot. In terms of like I said, the upside, I'll repeat myself, the 132.85, that's the first level that we're keeping an eye on. A nice push above that could lead towards this 133.50 area, which marks the high of the 27th of February. So be very careful with the pound, especially today. We do have another round of voting today, so yep, keep your eyes on the news and be very cautious with the pound pairs. EURGBP, very tricky, very interesting pair, and looking at this yesterday, I was talking about this one yesterday in my Traders Tea Time, and we were trading around here, the 0.8575 level. You can see a nice strong move lower here, of course driven by the a sharp rise in the pound yesterday, and you can see that the pair managed to travel lower, managed to break this 0.8530 level, and actually managed to retest this little area here that we had around the 0.8470, 72, 73, something like that, approximately there. Last time it was tested here on the first on Monday, from which it reversed back up here. Now you can see the same story happen again. So it tested that level and reversed back above the 0.8530 level. Now you can see that it's currently testing that area. Let's see if it actually manages to travel lower. If it doesn't, this could be a nice opportunity maybe for the bulls to step in here again and potentially drive this one back up here towards the 0.8575, or even actually a little bit higher again. So in a way, this, like I said, again, it would be in line with the whole roller coaster kind of thematic, like the roller coaster scenario that we're seeing here this week in the pound pairs. So be very cautious with this one. Of course, if this starts dropping below the 0.8473-72 area, then yep, brace yourselves. This of course would confirm a forthcoming lower low, and we could see a further slide to the downside. So be very cautious with this one. Of course, the main thing today, right now, keep your eyes on the 0.8530. Let's see where the pair travels to. If it actually manages to rebound from it and pushes higher, then yep, that's great. That's great for the bulls here. We could see this one traveling back up again, slightly higher. So let's see how this plays out. And the last pair I want to quickly touch on, and that's USDCAD. Now, I'm not going to spend too much time on it because it completed our scenario yesterday very nicely. So we've posted that idea on our trading view account here, and basically we're saying that a nice drop below the 133.45 level could potentially lead towards the a retest of the 133 zone. So and that's what exactly happened here. This is the idea that we've posted here. So perfect hit. And now from here you can see that it managed to rebound. It managed to test the 200 EMA and managed to rebound back to the upside. So we can just get rid of all this right now. For now, of course, we're going to remain very cautious here. In order for us to, let's say, to aim higher again, we actually would like to see a nice good push back above the 1.3345 level, and only then we will target these slightly higher areas again. In terms of the downside, if this decides to drop below the level here, the 132.80 zone, now this could be interesting for the bears because we could see this one traveling further down towards the 132.43, or even actually lower. I mean, don't forget, we still have this upside, long-term upside support line that's still is intact. This one's running from the 1st of February 2000, from the low of 1st of February 2018. So also very good potential area for a test, but again, we need to see a few support areas getting broken first before we could assume that. Okay guys, I hope you found it useful. Thank you very much for watching and listening, and if you want to join me later on today at my Traders Tea Time, and that's 14:15 GMT time. But for now, I hope you have a wonderful trading day, and be very cautious and always have your stop loss in place, guys. Thank you very much, and bye bye.